we want to follow up on that note from Apollo's chief economist. He added that a hawkish Fed could also lead to a big downturn in stocks. Saw a down day on Friday. We're seeing futures under pressure this morning. Do you think we may be starting to see the impact of this hawkish Fed?
Maybe to an extent, Frank, you could argue that you could blow off the top, if you will, right? Meaning like you got to a pretty stretched stage here. Technology in particular, I think big tech looks overbought on those oscillators. And then maybe to that analysis on liquidity, we've had actually a good environment of liquidity, much more surprising than anybody thought. So if you get some withdrawal from that, either that technicality of the Treasury continue to build up that balance at the Fed, or you get the Federal Reserve themselves being indeed hawkish and indicating not to stop quantitative tightening, there will be some adjustment here in the markets, because it is right, there's definitely a liquidity environment that's driven it. On the other hand, we have an economy that continues to surprise us with resiliency, and I think that has been a bigger driver behind the stock market than that liquidity argument. So unless we're seeing a really bad print coming through, say on jobs that comes up in the next 2 weeks or other data,
Okay.
I do think that it would just be topping out in the markets here.
Okay. So you actually put out a note recently yourself. You say between July and September, you're going to see the Fed do a skip, a hop, and a pause. What does that mean for stocks during that time? And what sector do you see potentially having the biggest negative impact in the scenario that you're laying out?
Yeah, the skip, hop, pause is the idea of that, the Fed has now indicated to stay on hold for this meeting and then assess it again the next meeting. But if and that means that probably July will potentially be this hike, but it is highly data dependent. If you then do get to a pause, then eventually it will be more, I think, on the one hand, a broadening of the rally. Other sectors that are undervalued to tech could outperform, say financial, say energy. They've really lagged, and that is part of the economy that maybe is really for other reasons that it has lagged than just that liquidity argument.
Okay.
On the other hand, you have obviously technology that has run up so much. There's probably a bit too much of an AI drive behind it, too much overbought conditions.
Yeah,
I think
that's the argument we're going to have all day. I think everybody's trying to figure that part out. I want to get to one other thing, and I'm sorry to cut you off there. Something else that's lagging, China's recovery. So we just showed just a short time ago, cities cutting their GDP forecast for China, Goldman Sachs cutting their GDP forecast for China. A lot of the big banks are. The Fed getting more hawkish, China going to easing to try to boost their economy. Does that change any part of your broader investment thesis to see a slower recovery in China and China really making big moves to try to boost things over there?
Yeah, during phases of their liquidity injection, there's actually been a positive, particularly for emerging markets, that has actually been seen as an idea that you don't really get to a growth rate in China that's much lower than all those forecasts are showing. They try to target 5.5%. But it is to be said, Frank, that yes, there is a slowdown in China that's more pronounced. So there is ultimately a negative impact on the global economy on this. That we have to keep in mind.
Right.
But otherwise, the liquidity injection is, I think, short-term positive.
All right, we're seeing Asian equities kind of jump right now, but very quickly before we let you go, what's one U.S. sector you see being negatively impacted if China continues to have this slow recovery?
Well, trade between the U.S. and China has been a huge driver of economic growth for both countries. So Blinken being out there and discussing this with China again, having a dialogue, yeah, that's a good step. But I do think that slowdown in China in terms of the manufacturing sector in particular, that's affecting our manufacturing sector.